Hi everyone, today I'm doing my free stocks I'm buying in December. I have to do a bit of emergency upload because I'm a bit busy at work at the moment, so I'm having to do it in emergency location. But hopefully on the next video I will be back in my normal place on the whiteboard doing the videos for this. But we'll get stuck into free stocks that I'm buying in December 2019. So the first thing I'm going to say for the free stocks I'm buying in December 2019 is that I probably won't be buying at the moment. The main reason why is because I believe the stocks are slightly a little bit overvalued. If we look at the S&P 500, we see we've had quite a good run at the moment and we've gone up quite a bit. And when the stock market tends to go up that much, it needs to have a little bit of a break, a little bit of a pullback. And I think that at some point soon, if it carries on at this rate, we'll probably have a little bit of a percentage pullback. And one of the big things I like to look at is the S&P 500, and the average P right now is about, and the P is 23, which is quite high because the average is normally about 14 or 15. So that's obviously standing out that it's actually quite a bit of a high amount, that it's a little bit overvalued right now at the moment. So I'm kind of like waiting for the stocks to pull back probably in this month before I go buy anything. But nevertheless, we'll get on to the free stocks I'm probably most likely going to buy at the moment that are closest to the most attractive prices. So the first one is Dropbox. Now I covered Dropbox on my last video, so I'm going to keep this pretty brief. If you want to go see a full detailed video on Dropbox, just go check my last one out. But Dropbox is down pretty much because of its earnings report, and in the earnings report it said that it had slowing revenue. And this has led to people or analysts as well getting a bit worried that the big companies in its area, the Microsoft, the Google, the Amazon, their kind of cloud services are battling away with Dropbox, and that's going to cause the revenue to slow down. Now, it's worth saying the revenue is still going to be 15%, which is quite a healthy revenue, and the EPS is still going to grow quite a bit. And let's not forget that cloud is a pretty fast growing sector at the moment already. So like I say, the big fear why this is down is because of the slowing revenue and the competition. And I think as well, because when we look at Dropbox, and Dropbox is a cloud service, it only has the one option, or the one moat, should I say, the one income stream. So if that company was to struggle with its income stream, the problem is it has no other incomes coming in to help support it or cover that single moat that it does currently have, and that's the big worry with Dropbox. Nevertheless, the stock is cheap. It's only around about $19 at the moment, and that is a dirt cheap stock. I mean, it does do about 1.4 billion revenue, I think it is. But even so, if it carries on growing at this revenue and EPS rate, the stock does seem pretty cheap if it is able to carry on competing in the cloud service. It still offers that double-digit EPS, the double-digit revenue growth, and as well as that, it has a fantastic balance sheet. The balance sheet has about 1 billion cash on, and it has no debt at all, which is absolutely fantastic. And it kind of screams out to a company that it's probably worth maybe having a look at buying this company out, especially when you look at the cash on the balance sheet. So it makes sense for a big company to buy this out. Now, I've said before, you can't solely get into a reason just to go buy a company because you think it's going to get bought out. But nevertheless, when we look at Dropbox at these prices and the growth it carries to offer, and it's beaten down so much since its IPO, there might be a potential for about a 40 to 50% upside from here. So Dropbox is one that I'm considering in December. I probably might buy this towards the end of the month after adjusting my portfolio towards the end of the year. My number 2 stock is Disney. Now, I was going to buy it actually this month, but because the stock has gone up quite a bit, I've kind of put off buying this stock. But this is kind of like the one that I'm really wanting to get into because I'm absolutely in love with the Disney Plus service that they brought out. Now, beforehand, obviously, Disney had some fantastic brands. It had some fantastic theme parks, and it was bringing out some blockbuster movies, and we've still got Star Wars on the way. The Disneyland parks are carrying on expanding and making more money, which is fantastic. But the big thing about this is now the added Disney Plus side, and I think Disney Plus has the potential to be bigger than Netflix. And if we add the revenue potential for what Disney Plus could bring on to what they currently make right now, it's going to look quite good for Disney. And the shows that they bring in, the thing is about Disney compared to like Netflix, is Netflix, even though they are starting to make their own movies and like Stranger Things, it's got a good following. The thing with Disney is they have potential to make so many shows that are already well-known shows because of the characters that they own. They can quite easily do a Star Wars series, which they already have done, which has done fantastic. They've got the potential for all the other shows that they own. Spider-Man, they could make a Spider-Man TV show because they already own all the rights to them. and they could just have it on their platform. And as well as that, it's cheaper than Netflix as well. So overall, with the Disney Plus side of it, this could be a fantastic thing for Disney, and that's mainly the reason why. And I think this will go up in value. As well as that, it's also got a dividend that's going to be growing. So Disney is one that I'm really eager to get into. I just don't know 100% know why when I'm going to do it at the moment. But like I said, I was going to buy it, but because it shot up quite a bit, I'm kind of like, maybe it'll pull back a little bit from now. We'll see. So Disney is a massive company that I really want to get into my portfolio for 2020. And my last one is, it could have been Ultra, but this has gone up a bit too way much. So it's going to be iRobot. And iRobot is a stock that I've currently added in my first position, but I'd like to buy a couple more times right now. And right now, iRobot is at prices that I want to try and get into the stock overall. It's obviously hurt by the China trade war, and that's mean the revenue has dropped down from 14% a year down to about 8% a year. But even so, 8% a year is quite fine. And as well as that, it is combating to try and stop the big effects of the China trade war on the company. And going forward, iRobot's product, artificial intelligent household items that help around the house with everyday tasks, that's kind of going to be the future with AI. And kind of, I think more and more our houses, our homes are getting monitored by AI products, and that will make a great impact for iRobot, because if they can carry on making some of these AI products around the house, it's going to carry on doing quite well, this company. Now, obviously, it's down absolutely huge, and that makes it a little bit attractive to get in. The big thing as well about this is that obviously it's still going to be making good revenue. The EPS side of it should come back at some time. But I think the point for me why I got into iRobot is that this stock is now gone beyond the point of being discounted. It is dirt cheap at these prices. It's in at its lowest P for a long time. I think it's at its lowest P ever. And it's only 15p for a company that's nearly a double-digit growth company, and it should be a stock that's trading around about a 30p. So for it to be around about a 15p right now, says that it's very cheap to me. The fantastic balance sheet also helps me get in. Now, obviously, if there was a recession, maybe this stock could get hurt, but at the moment, while it has no debt on the balance sheet, it has so much cash, there's nothing to worry about this. So I look at iRobot, and I think this is probably going to be easy money. And for iRobot, I see a good probably around about a 50% upside in this stock right now. So that's kind of what makes me attracted to get into this stock at these prices. So everyone, that's me talking about my three stocks I'm probably going to be buying in December 2019. Like I say, hopefully next video I'll be back in the my office doing it on the whiteboard. But for now, I'm just a little bit too busy at work to be doing it in the whole setup right now, so it's a bit of an emergency upload, so sorry about that, but hopefully we'll get things back to where they were hopefully on the next video. So thank you for tuning in. Give the video a like, subscribe, I'll see you on the next video.